You've probably heard of the phrase, don't put all your eggs in one basket. Well, the same can and should be applied to investing. Every investor has probably heard of portfolio diversification at some part or another in their journey. However, its importance tends to be overlooked amongst investors. You might be wondering, what does diversification mean and how can I diversify my portfolio? Well, that's what we're going to be looking at in this video. First off, let's start with the importance of diversification. The idea behind portfolio diversification is very intuitive. It's all about opening multiple positions to reduce the total risk in your portfolio. As all investments involve some degree of risk, proper diversification is crucial, as it is expected to reduce the overall risk of a trading portfolio. Let's have a look at some key rules of diversification. There are several simple ways to put some diversification strategies into use. Number one is the number of securities. The idea of diversification is increasing the number of securities you have in your trading portfolio. However, investors apply an approach, the more stocks are owned, the better, miss an important point. That leads us on to number two. Correlation. A portfolio may be considered diversified when it is assembled of negatively correlated assets, or at least assets that have low correlation. Therefore, the risk can be mitigated as the price of certain assets move in different directions. Number three is industry diversification. A diversified portfolio should have exposure to many different industries. Thus, your portfolio must be a mix of different companies in different industries within the economy. 4 is geographical diversification. Diversifying an investment portfolio across different geographical areas is expected to reduce the total risk too. And number 5, multi-asset. Finally, investors who want to build a diversified portfolio must get acquainted to different types of asset classes. Such strategies may include stocks, bonds, commodities, precious metal, cash, and real estate, just to name a few. A carefully selected multi-asset portfolio should diversify risk, thus protecting the wealth against volatility and market swings. Overall, diversifying your portfolio greatly reduces the risk you take on when it comes to investing. And make sure you subscribe to XTB to learn more about trading and investing.